Hello, everyone. This is Andrew Berman from National Mortgage Professional Magazine, Mortgage News Network, coming to you live from my home studio, the newly named Mortgage News Network studios. If this is the first time you're joining us, thank you so much. We really appreciate it. Every day we go live at 4 o'clock with some of the biggest leaders in the mortgage industry, just because we're all dealing with just such chaos going in our lives, personally, in just business. It's an unbelievable and a scary time. I just like every conversation. It's just extremes, from people saying that they've had their best months to people saying actually they don't understand actually how they're going to survive the next week. It's just a weird place that we're in. Today I am honored to be joined by Patrick Stone, who's the executive chairman and founder of Williston Financial Group. I'm going to bring Patrick into the chat. All right, Patrick, you there?
I'm here, Andrew.
Fantastic. Glad to have you join us. Thank you so much for taking the time out of your day to join us. We really appreciate your leadership. I've had the pleasure of just kind of following you. Watching some of your interviews, reading some articles that you've contributed to. So it's an honor to be able to have this dialogue with you today. So just let's start off personally. Where are you right now? And I know actually you're in your home office. Where is that, and how do you like this whole new work from home environment that we're in now?
Well, it's in Portland, Oregon, and I'm very fortunate. My wife takes great care of me, and I've enjoyed spending more time with my wife. I do miss being in the office and having the interaction with my fellow employees. And the intellectual stimulation that comes with that. But we are busy, and I'm keeping fully engaged, so I have no complaints.
So now, do you think actually that this will be something that you as an organization will adapt some of these practices that, as your guys, I assume, are all working from home for the most part. Do you feel actually that there's been a productivity increase, been the same, or decrease? When you're looking at the overall productivity of your many companies, and we're going to dig into, because it's not just one company. We have the Williston Financial Group, and which owns a bunch of different companies. But just tell us about overall productivity from your employees. And by the way, if anyone has any questions for Pat, please, I'm monitoring the chats, so please feel free to ask them. Also, if you can, do me a favor, share this. Let actually people know that we are live. So use that button on the bottom. You'll see actually, if you're on Facebook, you'll be able to hit here and be able to share this. So please, Pat, talk about your productivity.
That's a good question. Actually, I've had a couple conversations this morning with some fellow executives on that issue. It's really hard to determine exact productivity numbers given the limited length of time. We're running, I think, right now about 55% work from home. It's hard to get, that kind of varies a little bit. A couple of thoughts I had on it. In the non-client specific functions, we're able to do that fairly well, and I think we'll probably be able to move some functions to a work at home environment. The people that touch the client and interact with the client, we'll probably keep them in offices where they access the client and where they share the experiences more concurrently, if you will.
Yeah, that makes sense. So listen, the next thing I want to talk about. So let's talk about actually how our industry is adjusted. We're right now working in a primarily digital environment. So how do you think our industry has adjusted?
Well, it's been varied around the country, and it's been varied by market. And underlying that, you and I talked a couple of times, underlying that, of course, is the regulatory issues that vary state to state, and sometimes even vary based on whether or not a county can accept recorded document or e-closing documents. So it really varies tremendously. I think by and large, the industry has experienced a level of cooperation and communication that I have not seen in 45 years. I have been very, very encouraged by the openness and the candor of our clients, our competitors, everybody, and everybody is working to try to get the solutions accomplished and to take care of the clients. And this is a very challenging situation, but it's brought people together.
Yeah. So I now listen, as we're going through this, we're all looking actually at what it takes to go digital. And let's talk to us a little bit about actually, what it really takes for a mortgage lender today, from where they stand, and talk a little bit about where we are from a digital perspective today, and what it would take to get to be 100% digital.
Well, that's a great question. So I would hearken back, if I may, to 2015 when CFPB did their experiment on e-closings. They did their test on e-closings. We participated in that, and I came away from that really, really encouraged by what could be accomplished. And to give you a little bit more background, in 2012, bought a company that was doing e-closings with a credit union. And it fascinated me at the time, and I thought, well, this is the future. Now, that was 2012. The CFPB test, if you will, or experiment was in 2015. Came away from that feeling this is the way we got to go. But there's a couple of issues here.
So now, Pat, I just want to, was that fully digital in 2012? What?
100% digital with the credit union, because the credit union portfolios their loans. They don't need they basically are not in the same situation where you're selling the loan. You need a wet signature and all that. So,
right.
They were in a position where they're portfolioing their loans, they're making loans to their clients and their membership. So they were able to do that. And it was fascinating to me because everything was online. The communications were online. Everything was online. The 2015 thing with the CFPB was also very interesting because it did show that you could do things faster, more efficiently, probably have a greater percentage of deals closed because you are eliminating a lot of time and a lot of steps. Now, the underlying problem here, and I'm going to say this over and over again, is the regulatory issues vary so much. We've all heard a lot lately about remote online notarization and getting RON accepted. And Fannie Mae came out with a directive that they would accept RON done by a licensed RON closer. They would accept loans in a multitude of states, although they excluded California and Georgia, I noted, which are both fairly large markets. But the underlying issues with acceptance of remote online notary, acceptance and the ability of recording offices to record e-documents. There is just a myriad of issues state by state, and then actually recording office by recording office. So it's going to take a while to get the underlying regulatory alignment necessary to facilitate this. Then you're going to have integrations and you're going to have buy-in. There's a lot of sunk cost in systems that will not accommodate this, but I don't think that will be a long-term impediment to getting it done. I think it will get done. Right now, if I was to be honest with you, I think we're doing 10 to 15% of our closings in our company in a hybrid manner. Not all the closings, but a significant amount, or some part of it anyway, is digitized. So about 10 to 15%. If this keeps up for another 6 months, I think we'll get to 35 to 40%. Getting to 100%, I hope in 5 years, but I'll be surprised. I think it'll be more like 75 to 90.
Wow. So, but we're going through this crisis. Are lenders talking about this now? We're really, because I'd figure with volumes the way they have been, and also this liquidity crisis where, just everyone is just, they're scared and, but tell us what's going on inside the mind of the lenders right now that are talking about going digital. I would think actually this would be a crazy time.
Here's the biggest issue they have is that how do they take care of their clients? How do they get things done in an environment that is becoming more and more acutely aware of the need to social distance? So with that backdrop, if I'm a lender and I want to get things closed, I got to figure out how to do that without putting either my employees or my clients at risk by unnecessary personal contact. So the more you can move to a digitized medium, the better off you are. And we've had significant inquiries from 2 major lenders in the last 2 days about, can we do this, can we do that, how fast can we do it, so forth and so on. So the level of interest right now I've never seen, and as I mentioned earlier, the level of communication and the honesty and the just just the genuine outreach with an understanding that it's in everybody's mutual interest to get this done. I've never seen this before, so it's encouraging.
Interesting. So now, and where do you? Obviously, you're seeing it from you guys and your clients. That's obvious. But who are the other people actually that you feel actually like are participating and being this like kind of cooperative? Let's be stronger together kind of mentality.
Well, the associations, Mortgage Bankers Association, American Land Title Association, all the associations, I mean, from appraisers through lenders through settlement agents, everybody is trying to address the underlying regulatory issues and the problems that may exist that prevent us from getting there. So again, the level of cooperation there is amazing. The outreach, the interaction. This is actually, again, I've been at this 45 years and I've never seen outreach and genuine engagement like at this level. It's very, very encouraging.
Wow, that's amazing. That's great. So I'm gonna switch gears for a little bit. I want to talk a little bit about how you feel actually our government has responded to this situation.
Go ahead. I'm sorry.
If you don't mind, please.
Well, two levels. I just been impressed with the Fed, and I'm going to go back to last September when we had the little hiccup in the repo market. The Fed stepped in very aggressively, and if some of your listeners will remember, in the end of July, early August 2007, we had a hiccup in the repo market, and there wasn't that response, and that was the beginning of the end, and it caused a lot of concern. It locked up a lot of the financial market. So the Fed responded very quickly and very aggressively in September. They've responded numerous times since then. They've made it very clear that they are not going to let the financial market lock up. So that was step one, and that was great to see. Now the government's, I think, passed, is it 3 or 4 stimulus bills? I'm having a hard time remembering, but the government has been proactive in trying to address the pandemic by passing significant stimulus bills. The issue that I have and the concern that I have is actually the implementation of the CARES Act. On the surface, very, very good. I really thought that the increased unemployment benefits were not only necessary, but very sound, because that's going to allow people to continue or to re-engage very quickly. They'll be able to exist and continue to live at least in a reasonable manner until the economy re-engages. But I think the loans to the small businesses is probably the biggest issue right now. That has to be done. That has to be implemented. That has to actually result in small businesses getting loans. And we can't wait too long, and these small businesses will start to have failure. We do not want a lot of bankruptcies in small businesses. Small business in America accounts for 50% of all employees. A nonprofit's about another 10%. So you're looking, if you get away from major corporations, you're looking at 60% of the employee base of this country being really dependent on these programs being implemented successfully by SBA, by the government, and quickly, because most small businesses they're getting towards the end of their rope already.
Yeah, and really, those are the first ones that are going to be impacted. Those are the first ones that are laying off people, because there's a lot of business owners, but they might be successful. They're month to month or week to week. They make sure actually that they take care of their employees. But when there's no one walking in the door, it's very, very difficult to take care of your employees. I want to just also talk about actually the fact actually that the servicers now have the burden of the forbearance that many people feel like is just is going to cause a huge disruption, and if not potentially eliminate a lot of big players. You want to talk a little bit about that at all? What you're feeling? Because listen, you're a mortgage banker. You were previously a mortgage banker. You have an AMC You're actually vendor management. You have a technology company. So you are all these different things through the mortgage business. Would love to get your perspective of the burden that's been placed on the servicers due to the forbearance requirements.
Well, two issues, to be honest with you. The drop in interest rates caused a tremendous surge in refinance activity, and that weighs on servicers. If you don't, it used to be, I don't know what the exact time is now, but it used to be you had to hold that loan about 3 years to make it work if you were a servicer. So this lower interest rate is going to cause a problem. And then Calabria came out, I think yesterday, and said that we're going to guarantee the servicers, and we're leaving it up to Ginnie Mae. Now, if this doesn't last a long time, I think we'll get through it okay. If this lasts a long time, then we have a problem. And it's really hard to put your finger exactly on the timeline, but I'm a little bit nervous on that. We'll see. I mean, again, if we turn this around and then 2 or 3 months we're back to working on being closer to normal, we'll probably be okay. If it goes longer than that, it could be a problem.
Oh, well, that's great. So listen, I'm gonna switch gears again. I don't want to talk about actually something that's not related to mortgages. Not related to real estate. What those who know you actually know, you're a successful entrepreneur. Done many different things. One of the things that we were just talking about before is you have you're an investor in a nutritional company. Talk a little bit about that, because that might have not been something we would have talked about a month ago if we were going to be talking on National Mortgage Professional magazine. But now, since we're all concerned about health and well-being, it all of a sudden becomes actually a topic to talk about. And you talk a little bit about actually, your nutritional company and how you got involved in that, if you don't mind.
That was a really strange situation. I have some friends, and we invest in different things, and they got me in the oil business. And back when oil was $20 a barrel, the prior time was $20 a barrel. And we ended up buying debt in this company, and we bought debt in this company thinking that it would have to be redeemed in about 6 months and that we were going to really pull off a coup. Well, turned out we ended up taking over the company, and the company was I-26, Legacy for Life, I-26. Longevity markets our product now. And basically the product was created by DuPont by injecting chickens with 26 different viruses and bacteria, taking the eggs the chicken lays, making an egg powder out of it, fortifying it with 100% of your daily minerals and vitamins, and hoping that it would increase your immune system. And I've been on it for 20 years, and I think I mentioned to you once before, I had a cough one day. That was the only time I've had any illness in 20 years. Interestingly enough, in this pandemic, our sales have gone up 60%.
Yeah.
So we sell a lot of it in Asia. We sell a lot of it all over the world. But, I think people are looking, and no matter, this is not an advertisement for I-26 Longevity. Yeah. Whatever you can do to increase your immune system and your health, more power to you. Because right now, I want everybody to get through this okay.
Yeah, and I, wasn't meant to be like a commercial, but I just think it's fascinating. People know you, as the Pat Stone from Williston Financial Group. That maybe they don't actually know about this other side. So talk a little bit about because you're certainly not going to be actually one of the people that's going to be considered for our 40 under 40. You're what I like to call an established person in the industry. So what are you doing actually personally to keep healthy? Because you've got you look super healthy, super energetic. I think about a little more energy than I do. So talk to us. What are you doing actually, in your house to kind of just making sure that you still have that same energy and same excitement that you have about life and about the industry?
Well, I'm blessed to have a wonderful wife, and she locked me down about 3.5 weeks ago and said, you're over 70 and you've had asthma, so you're not going outside. So she put the clamps on, and I've been working from home, but I lift weights almost every morning, and I have a bike I ride in my gym, and then I take my dog for a walk, and I've been doing that for a long time. So I've been very blessed on being relatively healthy. And I think being active and eating right, by the way, most of my family are vegans. I'm the only one who eat fish and chicken, but try to keep my cholesterol low and try to be healthy. I mean, it's amazing. I quit drinking 26 years ago, so that helps too.
Wow. And how long have you been married for?
We'll be celebrating our 25th anniversary in June, so excited about that.
That's fantastic. So as far as actually, your personal workload, do you find yourself working more or less, since you are spending a lot more time at home, obviously?
I've been a workaholic my whole life, so I don't know. I tend to work if I think there's opportunity or things I can do. So it's not about time or necessarily goals. I did have to laugh, though. I'm averaging about 150 emails a day that I respond to.
Wow.
And doing a lot of writing, doing podcasts, doing webinars, doing whatever I can to help people. And this is a time where I think there's so much uncertainty out there that anything you can do to help people think about things or give them information they don't have, you got to do it. You got to, we're all in this together. We got to help each other.
And are your your sales staff, are they proactively making phone calls? Or are they just really more reactively responding to people saying, hey, listen, we know we need to change the way we're doing business. Please actually help us do that.
Well, I think our sales staff is very, very engaged right now on the lender side, on the realtor side, and then on with our, we have about 1,500 independent title companies that are agents and write our policies. And all three sales groups are doing a very, very, very good job right now. We have under the tech company, under West, we have a group called the MTDs, Marketing Technology Directors. And what they do is they teach people how to use technology to get business and to help their clients. Now, you can imagine in this environment, the desire to know more about technological solutions has gone way up. Yeah. And actually had one of our MTDs comment yesterday that he had a realtor get him online with a customer, and they ended up getting the listing because of that, because he showed the customer how they could use technology to market the home. And I mean, that's tremendous. And we have social media challenges within our sales group. Who can contact how many people and do so in a way that engages them and helps them. But our salespeople are very busy.
So now, did you have those same things when you were working in a physical office? Or are these actually new practices that you've added actually in the new norm?
No, this is something we've been doing fairly aggressively for about 3 or 4 years. We started it about 5 or 6 years ago, but it became very popular, and we do a lot of seminars, a lot of webinars, a lot of things with people to show them how to use technology. Now, we don't benefit from their use of that technology, but we have a group at West that analyzes different technological solutions, and we at any given time have 15 to 20 different types of technology solutions that we can offer people and show them how to use it. So this has become a tremendous sales tool. Now, West is owned by the holding company, not by the insurance company. So we can do this in a compliant manner. But our goal here is to help people be more successful because, and this, forgive me, but this has been my favorite saying for a long time. If I can help you make more money, I make more money.
Yep. I agree. That's great. So we got a question that just came in from Melissa, my team. What advice can you give to new industry professionals who feel like they got in at the wrong time? Melissa, great question. It's funny. I just talked to one of our partners who hired a bunch of people like earlier in March, and they quickly shifted actually from their traditional training program. So please, if you can answer Melissa's questions, what advice do you give to the new industry professionals who may feel that they just got in at the wrong time?
Well, you got one advantage going for you as a new industry professional, and that is that you're not locked into a set methodology that you've been invested in for a long time and find it hard to change. So you have the ability to embrace technology. You have the ability to reach out to people, see what they need, find technological solutions for them, be a leader. One of the problems and I don't care how flexible your mind is, how intelligent you are, or what your intentions are. One of the issues we all have is that we get used to doing things a certain way. And a new individual, a new professional in this industry has the ability right now to really embrace technology and new solutions, probably more effectively than some of us old codgers that are stuck.
Yeah, that's good. A great point. Listen, I some of the most successful originators today are companies that got into or individuals and companies that got into the business in 2008.
Yep.
So like if you think about this, if some of the top originators, there's one originator did 617 loans with 3 processors, and got into the business in 2008, which probably people said you're crazy for getting into the business, but something. When you're building up from like a phoenix rising from the ashes, you're building up from nothing, and you're not learning actually these old habits. So, Pat, let's take us back actually to how you first got into the mortgage business.
Well, I got into the title business in 1975. I was in the Army, got out of the Army in 1970, spent a couple of years kind of rehabilitating, if you will, and then went to college, graduated, started in graduate school in archaeology, decided I didn't want to do that, went down to Mexico, did some oyster diving, came back looking for a job, saw an advertisement for a title examiner trainee, had no idea what it was, but I needed a job. So I started on that, and I've always been fascinated by the process, and really, you think about it, of all industries and all processes that we have in our economy, we have a common goal, that is to put someone in a home and provide them with the financing and process to make them either an owner or to refinance that home. But no industry has so many disparate parts, so much regulation. I mean, our company has got about 130 regulators that we report to varying different times. But I mean, it's unbelievable. Lenders have regulators, realtors have regulators, and we all are, and then we have state by state laws. So this is a very complex industry, but it's been fascinating to me from day one because there's always an opportunity to improve the process. And as I mentioned earlier on your program here, I have never seen a time when people are more willing to talk and think about how you can work together to make it more efficient. So it's kept me going for 45 years because every day there's something new and something that challenges you to do it better.
So would you say actually with all the companies, with Williston Financial Group, the WFG Title, West, is there one common like a mission statement that you guys have, or does everything kind of operate independently? I'm just curious.
Well, pretty much one common, we're 10 years old. I worked and then I was going to retire, but I wasn't any good at that. So I started this company. But we have communicate, collaborate, and coexist, and it kind of it's the 3 C's in our logo. But really, and I got to be honest with you and your audience, that came out of a book called "What Would Google Do" that I read in 2009 before I started this company.
Wow.
And I didn't like the book very much, but the first chapter they talked about why Google was so successful. And the reason they were so successful is they communicated nonstop with the people that they're both clients and people that they worked with. They collaborated with people, and then they understood that they wouldn't be around unless they coexisted with people. And I thought, that's actually a pretty smart way of coming at it, because if you have that in goal, then it becomes, if you have that as your mantra, then it becomes a common goal with everybody you talk to. Like I have employees that call me up and tell me I'm stupid. And I say, that's okay, that's fine. As long as our conversation about what's in the client's best interest is about a common goal. It's not about politics. It's not about who's more important or control. It's about the client. You communicate, you collaborate, and you coexist.
That's great. That's awesome. I love that. I'm probably going to go check out that book. I think that sounds awesome. And the fact actually that it inspired you to create actually the mission for these organizations. That's wonderful. So I really appreciate it. So listen, we're going to wrap this up. But if someone wants to get a hold of you, what's the best way to get a hold of you or your team, or to do business with you guys?
Well, you can email me anytime, pstone@willistonfinancial.com. We're a national company. We have reps and people everywhere. So look up WFG National Title, or look up Value Trust, or look up West, and we'd love to help you in any way we can. And I don't, to be honest with you right now, it's not about yes, it's about making money, but that's not what we're thinking about. We're thinking about, how do we get through this? How do we make it work better for everybody? How do we take care of our clients, and how do we take care of our friends?
Yeah, listen, this is the things that we're trying to pull out from this. At least the positive things, with all the negativity around us, with all actually, the sadness. No one actually we have friends and families that are going to lose their lives, and that are going to be financially impacted by this. We need to look actually for the things that we could be excited about, the takeaways. Being at going digital. As my buddy Mike Tedesco just joined us here. Thanks, Mike. Mike's going to be on next week if anyone's paying attention here to the series that we're doing here. But this is creating leaders. This is creating actually a time actually where we're going to be able to look at our systems to enhance them. I think you said actually you want to. You could see us being at 50% digital. That's what you said, Pat?
40 to 50%. I think we can come out of this, and not. I wouldn't say just digital. I'd say hybrid, but using components to digital type closing. Yeah, we're going down that road now, and I think pretty much everybody's on board with it.
Yeah, and listen, sometimes we as an industry get forced into innovation. While 2008 is a very different animal than what we're going through today, but 2008 took us from an industry that was focused on profitability and risk management to an industry that became obsessed with customer experience.
Yes.
If you think about it, actually, it's like we have conferences that are dedicated, to customer experience. You look at the social survey; it's just a bunch of people getting together that are just obsessed with creating the best possible customer experience. So in the end, we'll get through this. We will do we'll find a way to enhance our process, and way to connect better with our consumers, with our communities.
Can I offer your audience a kind of a positive concluding comment, if that would be okay?
Yeah, please.
So Goldman Sachs came out with a research piece today that I really, really liked, because what they did is they focused in on different recoveries. I think everybody acknowledges that we're going to have a fairly steep recession here, a fairly severe reduction in employment, and a fairly meaningful drop off in economic activity. So the big question in everybody's mind is, how fast can we recover? How fast should we think about recovering? Goldman Sachs came out with a piece today, and they were examining the recession that was caused by Paul Volcker in the early 80s when he ramped up interest rates. Now, a lot of you weren't around then, but I can tell you it was pretty interesting. Mortgage rates got up around 16%, so business kind of dried up, and we went into a very steep, self-induced recession, very similar to what we're going on right now. The recovery was amazingly fast from that, and Goldman Sachs analyzed that. Now, there's no guarantee this one will be exactly the same, but that one we recovered very quickly. Employment came back quickly, and I think it astounded a lot of people how quickly we came back from that recession. I think there's an opportunity that there's a good possibility that we'll do the same on this one. I certainly hope so.
Wow, that's somewhat encouraging in a world of not such great news. So, but Pat, thank you so much. By the way, I totally forgot about this. Just actually posted today, on National Mortgage Professional, the mortgage industry collaboration is the key to transformation. So that just got posted today. So check it out. Go to nationalmortgageprofessional.com. You should see that as one of the top articles. So check that out. And again, Pat, thank you for your leadership.
My pleasure, Andrew. Thank you for having me on.
All right. Everyone, thank you again for joining us. Tomorrow, we're going to be doing another actually episode. Tomorrow, we've got Gary Malis from PRMG going to be talking about capital markets. Gary is just a wonderful person, a great guy to guess. He's going to tell us some things that are some things that we might not be happy hearing, but we love actually, Gary, love PRMG and what those guys are doing over there. Hopefully, you're paying attention to what Kevin Perenio, their chief lending officer, has been sharing on a daily basis, just about giving actually updates from the markets. Of course, updates from the field, and Gary's sitting right behind him in a lot of cases, so you get actually KP's information from Gary filtered to you through LinkedIn. So again, thank you everyone for joining us. We really, really appreciate it, and we will see you tomorrow.